let's get into today's trading. I took one trade today. I was long on Nasdaq, and the model played out kind of on the, well, it did play out on the S&P, and it was the same entry criteria on Nasdaq, and unfortunately we just got swept out, literally by the tiniest amount, and then price ended up going in our direction. So that was 50 points because of the Nasdaq, and minus 110 on the day, which is perfectly fine. It's within the risk management profile. So still up on the month. And in terms of what I was looking at today, let's get into it. So if we look at my notes here, and also at the 4 hour, we have you can't see the sessions here. So we had the London high, the PM high from yesterday. We also had this high over here, these equal highs here, and all-time highs on the S&P as draws on liquidity. As you can see, looking at the overall market structure on the hourly chart, we're very bullish. Pull back into this fair value gap and continuation up was the goal. So in terms of what I was looking for on the S&P, before 9:30, price had already swept the London low and the Asia low and had traded into this fair value gap. Marked out the 8 o'clock 15-minute candle as usual. And so price traded up above the 8 o'clock candle before the New York Open. And although I was looking at these imbalances here, I was thinking, well, this is fine because we're just filling these imbalances, and we'll just wait for a midpoint tap to then go further long. So look, as you see here, price already on its way to TP, could still be a pullback at open, although more likely the retest was at 8:30. So the news that dropped today, the core retail sales, dropped a bit earlier, and it was bugged out on here because I think it was a delayed news drop by about a month. So because of that, we can see this tap here after the initial breakout, well, not break, but like the initial push out of the zone, the tap at 8:30, price started running, and if I'd got in here, then TP would have been hit at the market open. That would have been great. But nonetheless, that's not what I'm here to trade. I'm here to trade when the AM session opens, although this can be an option. Ultimately, I just wasn't looking at the charts around this time. I was still having my lunch and just getting ready to trade afterwards. So if we look at the 5-minute, so we drop down onto here. So when was this? So at 9:25 and 9:30, price had already started dipping down on the Nasdaq, and at the same time, it was still sort of holding around this level here. And ultimately, it was a little bit of impatience. I'm not gonna lie. Like, I wanted to take the trade on the S&P today, but I was looking at Nasdaq, like I say, and it just came down to the midpoint a little bit earlier. So I have my limit order placed, and this is just me talking about the S&P not trading down to the midpoint and look to hold just above. My limit order was tapped in at 9:37 and closed at 9:42. So 5 minutes in this, and you can see here, price was sort of just working its way down, and this is the stop loss here, not here. This is just the AM session. I was looking for the reaction off the Asia low here and just anticipating it would hold. What I didn't notice until afterwards was we had this 5-minute fair value gap across here, which would be the equivalent to where is it? Be the equivalent to this 15-minute fair value gap here already being tapped at the 8 o'clock candle on the S&P. So yeah, it's one of those, like it's absolutely fine, you know, stuck to the model, entry criteria was the same, and ultimately it was just me being a bit hasty, and you know, it was a tiny bit of FOMO. You know, I wanted to still catch the move because I was so inherently bullish today. Like you can see all of these bullish draws above compared to the bearish, which is pretty limited at this point. And market structure just looked like it was going to continue upwards. So yeah, pretty much the further on my notes, the sweep on the US100 stopped me out. US500 did not tap the midpoint before reversing. Missed opportunity today as price had gone to take the buy side targets. And, you know, with all these in mind, I was thinking of extending the target. Like the 3-to-1 would have been lovely. But if we had extended, you know, 540 there, it would be a little bit reduced because the entry would have to be around here. So it'd be, what is that, 5.8, 5.2, 5.3. So it would be about £590 today if I'd let it run all the way and I'd entered at the top of the midpoint, which is still part of the model. I just missed it, and I think as well because I'd just taken the loss on the Nasdaq, there was a little bit of wrestling in my mind, being, you know, is price going to continue lower? Like with all of this behavior here, broke down below, traded up below the midpoint, came back down, swept. And basically this movement here on the 1 minute is the equivalent to this movement here, just above the zone. So what to take forward going into the future is to notice how the 5-minute candles respected this 8 o'clock zone, 8 o'clock 15-minute zone. They all closed above, and you know, an entry could have been taken on the top of the midpoint. And yeah, ultimately it's completely fine, but at the same time it is a little bit of a bummer considering like how obvious the draw was today. Like my direction was correct and everything, and we just unfortunately got stopped out. So it is one of those. I closed my limit order at 10 o'clock and noted how the 5 minutes all closed above the range before the reversal up. And that's pretty much it for today, you know. I'll chat a bit more about what happened afterwards. You know, we had this 5-minute inverse fair value gap form, traded down, tapped it, and then that could have acted as another entry. But again, that's not my model. Didn't get it on the Nasdaq here, but nonetheless, it just goes to show that the model does work, and it was just an executional thing today, and just being a little bit too hasty and not sticking to one market rather than what I did today, where I swapped to the Nasdaq from the S&P, which is where I'd drawn out all the draws. Granted, there was still this high here above London, and if we draw that out, you know, this high here, oops, not that one, delete that. Where did it actually go to? This high here, which isn't as clear, but you know, that's what I mean. Like the S&P was a lot clearer today. It was a lot cleaner. Just unfortunate. I should have just waited, and you know, maybe even at the same time I probably would have missed it. Like on the S&P, I had my buy limit set from 909, which is, where would that be? This candle here, this one right here. So yeah, that would have been a straight 3-to-1, 2% risk, not units. Oh wait, hang on. Yeah, 29 units. So that could have been 375 there. So, well, it would have been a little bit more before the loss. So it would have been like, there we go, 2.05. So absolutely fine. little bits to learn. You got to take those little paper cuts when testing, well, when using your strategy, just to adapt it, modify it. And ultimately, it was just a little bit of oversight combined with rushing and, a tiny bit of fear, just because of the fact that I'd taken the loss on the NASDAQ beforehand and I wasn't 100% sure. And that's it. Simple. And yeah, like I say, only £110 down, but that still leaves us on the current month. That is today. Check my broker statement. On the current month, still leaves us 250 in profit. So we're still doing good, looking ship shape. And yeah, I think with the news drivers tomorrow, there could still potentially be opportunities left in the week going into Wednesday and Thursday. As you can see, unemployment claims on Thursday and non-farm employment change and unemployment rate tomorrow. So we'll be back, come back stronger, and yeah, I'll catch you then.